What? Hi guys, how are you? Welcome back to Real Macroeconomics and Investing. Welcome to TradingView, YouTube, Twitter, and my subs. How you guys doing? Let's get started. It's been a while since I made a video, so I figured I'll make one and just give you a general idea as to what's going on. Look, generally speaking, the markets don't look right to me. Okay, we're going to talk a little bit about it. I'm a macro guy, so I look at all the fundamentals, the macroeconomics, the technicals, and so forth. If you look at the market internals, there's a lot of problems in there. There's a lot of structural problems in there. Doesn't mean it can't go higher. I'm just telling you that these structural problems, uh, they're not looking good for me as to the way I do things. All right. Now, I do understand that for the last 14 years, and most of this whole generation has been forgiven for buying the dips. Not necessarily that they made money, because they just, buy one day, sell the next, and when it doesn't go their way, then they just keep doubling down and holding, and then eventually the market comes back up. As soon as it comes up to their break-even point, they get out, and then they go out and do it all over again, right? So it's the markets have been forgiven for the newbies. Okay, the problem is that the newbies never really developed because it's been only one way up, and that's it for the markets. So you're kind of underdeveloped because you haven't seen bear markets, you haven't seen sideways markets, you haven't seen catastrophic markets, and you don't get too many of them in your lifetime, in your trading lifetime. Let's say you became trading conscious, at the age of 35. Okay, fair enough. How many bear markets do you think you're going to see in your lifetime? Two, maybe three. The first one is going to shock you. The second one, you'll kind of have an idea as to what's going on, right? Hopefully, if you were taking notes the first time around, right? And then maybe a third one towards the end uh, of your trading career. So there's not too many people out there that have fully developed and fully seen everything. Sure, you can say you traded crypto or something, you saw a bear market there, but that's not really the same thing. Okay, maybe you owned a stock that went down like Tesla, just crapped on you, and you're like, oh, I'm a bear expert now. No, you're not. No, you're not. But anyway, I made a video at the top of the bear market. If you guys remember, you can go back and see it. All right, just type in "don't try to pick bottoms" on my TradingView feed. Um, Very important video, and I'm telling you point blank that you should not try to pick bottoms. Don't do it. You're gonna get hurt. And I hope that people have realized why I said that, when I said that, and how right I was. Picking bottoms is not the way you make money. Okay, buying and holding, or shorting and holding, and let waves work their way through is how you make money. Not trading every single day, not trading 10 million different stocks, not trading a different stock every day. It's not going to make you money. That's gambling. That's garbage. So I hope you're smart enough to not do that, and you have to learn how to develop as a trader. You have to learn how to hold on to trades, but to hold on to trades, you got to have proper training. You got to have proper understanding, right? That there are rules. The markets are not just willy nilly doing whatever the hell they're doing. Doesn't mean that they're perfect. They're not perfect. So you got to be able to recognize that imperfection, and it's not going to happen every single day. There will only be a few times in a year, maybe 2 years, that you're going to make a lot of money. And then the other ones, you're just going to be, playing with yourself. If you notice, and you go through my feed, you're going to see I was very active. Uh, well, I guess May, June, July of 21, talking about inflation. Inflation, inflation, inflation. It's not transitory. Stop saying it's transitory. La, 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 la. Then I started to get very bearish. And every chart I was posting, short, 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 short. Nobody had a clue that the market was about to turn. Okay? Can I do that today? No. Market's already in a bear market. A lot of stocks are down 85, 75, 65, 95%. I cannot repeat that. Okay. So the market has to be ready to give you money, and you need to recognize it before everybody else does, and then go out and execute on it. And then you're going to see how right or wrong you are. I never know uh, how it's going to work out for me. I don't have a crystal ball. I have no clue. That's why I don't have targets. You know when I know I was right? When I sell it. Okay, and I do go back to my trades, and if I seen that this particular stock or index or whatever it is has matured sufficiently for me, or there's not enough meat on that bone, I will close out the trade. And I've done that. Don't think I forgot about them. This is my little diary. I go back, I check everything. So let me give you an example. Not natural gas. Nobody wanted to short at a 9. In fact, some guys were giving me a hard time. They're like, well, it's not going down. And, with Putin the way he's doing, Europe is going to freeze. Nobody wanted to short this. I did, right? And then I closed it. When? January 1st. I said, I'm happy. I'm happy for what I made. So how much did I make? Well, let's take a look. Gotta zoom out here a little bit. Okay? A little bit, just a little. All right? So you kind of see how long you got to hold something. You can't just say, "Oh, yeah, I'm done. I'm finished. I'm done. Oh, look, it went up. Oh, yeah, I'm done." Okay, so we shorted at 9 and covered it somewhere around 3 or something, whatever it was. I don't even know what the price was. Whatever it was on January 1st, somewhere here. I think it was January, somewhere around 3 something. Okay, so when is the bottom? I don't know when the bottom is. Don't care. What's my target? Don't know. Don't care. When I'm satisfied, I'm satisfied. So that's huge. It's a huge move to the downside. It takes a lot of, you know, knowledge and understanding and training to be able to do something like that. It just doesn't come overnight. And especially for you guys who are just traders, you'll never learn how to do this unless you try it. But you can't try it because you don't have the training. You don't have the understanding why you should hold it. And you don't know if this is even the right ticker or whatever, index or commodity or bond to do that, right? So you gotta make an effort. Okay. Sorry about that. But anyway, you get my point, right? I close them out, I follow my trades and so forth. All right, cool. So what's going on in the general overall market? Okay. It crossed the line. Everybody got excited. They're like, oh my God, it crossed the line. Look at that. Ooh. Okay. But well, yeah, it did cross the line, but it's got a bearish structure. It's 1, 2, 3 up. This is not Elliott wave, by the way. 1, 2, 3 up. You got a structure. You got the hook. Now this is valid. This is a bearish structure. If it's pointing up, the next move is going to be down. How far down? Don't know. Not my job to know. Don't care. When I know how far it went down and I'm happy and the economics fundamentals and technicals, present themselves that I should take profits, then I will. All right. Um, Now, here's another thing. Somebody's giving me a hard time about Matic. Why are you giving me a hard time about Matic? I give you the trade setups before they happen or as soon as they happen. And I look at everything from a risk reward standpoint. So you look at something like Matic and beautiful setup, right? Got a double top, you got a head and shoulders, it's still within structure. You got your little 1, 2, 3 going, okay? 1, 2, 3, right? You got the hook. It's now a valid structure. Okay, it's pointing up. What's going to happen? Well, more likely than not, the next move is going to be to the downside. All right. So what happened? Well, it went one more up. So what? So what? Did the trade trigger back here where the arrow was? No, it never triggered. Nothing broke. So why are you getting all excited that it had one more up? Who cares? Let it do whatever it's got to do. Eventually, this is going to correct. And look at that. And this is what I mean that I like to see some kind of structure, some kind of 1, 2, 3 move down, something, something of substance, not just because it crossed the line. And it triggered the trade here. Fair enough. Let's go down. Let's take a look. I even updated it. Okay, there it is. I'm showing you that, hey, look, it's building pressure and breaking down, right? Look at that. The next move is going to be to the downside. All right, you got another head and shoulders. So, yeah, try to understand the way I do things, please. Okay. So now, if this gets one more up, it does something like this. So be it. No trade triggered. If it breaks up here, well, it's still a valid trade. Nothing has changed, right? So try to understand that. Now, again, structurally, the markets internally look screwed up. Just because it crossed the line doesn't mean a whole hell of a lot. For the FOMO guys who love to chase, the bottoms. Oh, Nick, you never chase the bottoms. Oh, sorry, you never chase the bottoms. You never. I don't. I trade every other wave. It's not that I don't see that they're going to pop. I see them, but I don't take them. Why? Because if you try to trade up and down and up and down and up and down, eventually you're going to get out of sync with the market and you're going to lose, and you'll keep losing. And it will be a long time before you even sync up with the market if you're lucky and you have a large enough account and you didn't blow yourself out. Okay, so if the trend is lower, I take shorts. Okay, if the trend is up, I take longs. I don't try to go long and short and long and short and long and short. It's not the way it works. If I remove all these lines, what do you see on the most purest of forms? Lower highs. We've never made a higher low. I'm sorry, higher high. What do you see? Lower lows, right? Lower lows. We never made a higher low. Doesn't mean we won't at some point. But you cannot tell me just because it crossed some line that, oh, suddenly it's bullish. I picked the bottom. Look how smart I am. La, la, la. Let's go out and FOMO. In fact, I tell you the opposite, that these moves are designed to provoke emotion. That's why they're there. They're not there to tell you some bottom is in. And every single time that I've said that, guess what? I have been right. Well, yeah, I caught a little piece here and I did this and I made money on this. No, you didn't. You may have caught a couple pieces, but ultimately it resolved to the downside. Okay? That's You're making it way too difficult for yourself. Way, way, way too difficult. Don't trade both sides. Trade every other wave. The trend is your friend. Blah, blah, blah. Come on. All right. So let's take a look at some of these charts here. Okay. First of all, don't forget that this is my public. This is like my little Twitter feed. Okay. I just post whatever I think is important. Um, from macroeconomics to trades to what I think the market is at and so forth. Um, the other thing I want you to kind of again pay attention to is that you cannot make these big kind of calls unless one, you know what you're doing. Two, the market is right and set up correctly for you to make these big moves, and that you have the ability to hold on to trades. And again, if you go through my list here of all the trades, you're going to see a very high percentage of accuracy. But you don't see me trading in and out constantly. Okay? It's a very high percentage of accuracy. And that's where you want to get as a trader and as an investor. Now, gold. A lot of people think, well, gold Is it inflation head? No, it's not. No, it's not. Why? Because the dollar's going up, right? There was a post that I had here on TradingView that has been blocked for whatever reason, and I said this early on when inflation started to kick up in April, May of 21. And I said, look, we have an inflation problem. Nobody understood it at the time. How did I know? Because the markets told me. We had commodities breaking out. We had the 10-year that was breaking out. We had mortgages breaking out of key areas. They were low by everybody's standards, but nobody understood the significance of them. And that's why I kind of have this one. This is, I think, January 4th, 2022. Okay. The 30-year yield was about 2%. And I said, man, this is bad juju. This is not good. And I said 30-year mortgages will get more expensive in 2022. And I say down here, the big trade is not Apple and Tesla. The big trade here are mortgage, are interest rates, are bonds. And sure enough, I was right. Okay. Now, all the experts are so excited to come out and tell you what's going on. They want to tell you all about the 30-year mortgages and real estate. Okay? So nobody understood this. Certainly nobody on TradingView. I got 14 likes. That's it. It's like, okay. But it was the most important thing that was happening. It's not going to happen every day. It's not going to be January 1st every day. Okay? I can't repeat this kind of bond trade that's going to last 2 years. Why? Because we're not at 2% anymore. Now we're up at 4%. Okay, so again, you're only going to make markets a couple times a year, maybe sometimes even 2 years. Right? Sometimes you make 5, 6 times in a year. Depends on the market. All right. So gold. They tell you that dollar up, commodities down. That's not what happened this time. And again, they removed this post from TradingView. I don't know why, but whatever. Right? And I said, look, it's wrong. The soundbite sounds good, but it's not reality. And your job is to know what reality is, what the truth is. This time we had dollar up, commodities up. Okay? And gold did nothing. Nothing. Commodities went up, but gold didn't. I mean, and people keep talking about gold. It's like this is the worst trade. This is the worst inflation trade there is. You get no dividends. There's no earnings yield. There's no interest rate. There's nothing. And it's done nothing. And people still talk about it. And the chart is still bearish. You need for this to break out, not only break out and cross some magical line, but it's got to hold. And then we can start talking about possibly getting some kind of breakout in gold. But that would require for the dollar to go down. And right now, that does not seem to be the case. So you can sit here and scream at gold and, hold your breath, shout at it. It's not going to work. Okay? Not going to work until we get at least a breakout and a hold. US dollar. Look at the date. Okay? The date I posted this was March 1st, 2021. And I said, man, this is setting up for a breakout. Okay? This is going to go. And went up, came back, bounced, okay, and off it went to the races. And just kept going off into the races. And running and running and running and running. Okay? And now everybody is an expert. They want to tell you about the dollar and they want to tell you about whatever, inflation and you know what I mean. And the terminal rate this and the terminal rate that. And it changes every day, the terminal rate. Anyway, that's it for this video. The structural problems, okay? Thank you very much for listening to me. Thank you for supporting me. I'll try to post the best possible trades, but if there's nothing to post, then I won't. So that's it. Take care, and I'll talk to you guys soon. Bye-bye.